morning. Welcome to Morning Call. I'm Latha, Venkatesh with the Sonia, Shenoy and Anuj Singhal. Well, it does look like we are headed for a good morning of trade. It was a great finish on Wall Street. Nikkei as well at 20,000, Chinese equity at 7-year highs. And in India as well, Anuj has been very strongly arguing that if you just took out some of the private banks, we too are at all-time highs. So perhaps a good morning of trade. The IIP numbers as well didn't disappoint.
Yes, in fact, we have lots to cheer about. Also the fact that it's a truncated week.
Yes.
We are only working 4 days this week. That will of course top our list. But
April is such a lovely month. Sorry, go ahead.
No, but as you rightly pointed out, I mean, global markets are also moving with so much strength, and our own market is moving in tandem with that. There was some buying by FIs as well on Friday. But first on the macro data, Latha, I mean, this IIP number provides some cheer to the street for sure, but how much of it do you think, the market will react to?
Well, I don't think this is, first of all, it's a very lagged number, This is a January number. I don't think the market is going to react specifically to that. Yes, it's good at 5%, and even the January number has gotten revised higher. I would actually look for the April Jan number, the 10-month number. That comes in at about 2.8%, which is better than the year ago. Look at the year ago number, minus 0.1. And then if you delved in, whether you looked at electricity, manufacturing, capital goods, all of them look very good. But remember two things. We're working off a low base. And look at the overall index of industrial output. Like you look at the Sensex and the Nifty, the IIP is also an index. That index number for, the April-January period, average stands at 174. 4 years ago for FY12, the average was 170. Hey, we were moved. That is the point you have to remember. That over the last 4-5 years, industrial output going by the IIP has not done much. So you may squabble a little about 5% 1 month, it being a 3-month high, and a 5.2 and 2.8 being better than minus 0.1. All said and done, in the last 4 years, we have not done much.
But is there anything in this number that indicates that perhaps there's some pickup in the manufacturing sector?
Well, you could, because you're distinctly seeing capital goods for the second month in a row doing that 8% tick. It's a lumpy number. So every once in a way you will get a very bad number, but 12.8 was the number for January, and then you get 8.8 for February. So together it looks like maybe there is some bit of growth activity, some bit of capex that's happening. As well, consumer durables, consumer non-durables output is up at about 10%. Consumer durables are not picking up, but I wouldn't worry that much. Consumer durables tend to get imported a lot. These days, people like Anuj and our producer, our channel producer, Prakran, all the while buying on the net. So consumer durables to a great extent gets bought on the net. We shouldn't, concentrate or take that as the indication of,
In fact, we should start adding that into the IIP.
That takes away. This is an output figure. This is an output figure. How much is India producing? It's just that. So Make in India this is an index of Make in India. And there, it may be, you may argue that it is a little better than previous quarters at 5.2% in November, another 5% coming in February. You can argue that the last 2 months are doing somewhat better. But, it's a very, very limited cheer. Let's wait for more confirmation. It's a recovering economy, not a recovered economy.
All right, well, let's see how the street reacts to that. As you said, it's a lag number in any case. But, Anuj, what about the market itself? We are virtually at all-time highs.
Indeed.
That 9,000 level has been a bit of a resistance for a while, and we have earnings season as well this week.
Indeed, Sonia. So the market is practically at all-time high, and if you were to exclude the 3 or 4 private sector banks, this market is at all-time high. I think the more important aspect was that last week the broader market hit all-time highs. On Friday, Phoenix Midcap Index hit all-time high and closed at all-time high. So, if you were to just leave out 3 or 4 stocks, you know that traders are feeling good about the market. They want to buy stocks. I think what's interesting now is, and what's been the key takeaway for last 1 week is that the focus is now shifting from, growth at any, or premium stocks, quality stocks, to stocks where you have value. They may have some problems, but you find a lot of value. And the biggest example is PSU banks, because you've seen a lot of buying in PSU banks. Reliance is other example. That's been that the market leader for last week has been Reliance and PSU banks. If you see buying in stocks like State Bank of India, PNB, Bank of Baroda, what's that telling you? A lot of these stocks available at half times price to book value, but you had the asset quality problem. The buys not reflecting in the market internals is because the PSU banks only form 18% of the bank nifty. It's not even 20% if you add all of these together, and if of that only SBI alone has about 12 or 13%. The rest of the stocks don't really matter. So you have a situation in which the bank nifty is underperforming, but within that PSU bank index has been a big outperformer. It's up 8% this month alone, and from the lows it's up quite a bit. So that's clearly the sense that you get now, that it's the bottoms up market. Investors are looking at a lot of value, and that's one more reason pharma stocks have started to correct, because some of these stocks have really run up way too much. So the focus now is on low value stocks, or at least bargain stocks. FIs not really making this market, because even on Friday it was a net buy of only 300 crores. So not really, that number is not that material anymore. This market is being driven a lot by domestic money. A lot of retail has been participating, HNIs have been participating, and you're seeing that kind of buying. I think for me the big question really is this Q4 earnings. How much of a disappointment has been factored in? And secondly, what will be the earnings? Will it be worse than what's been priced in, or will there be a couple of positive surprises here and there which could lead the markets to maybe a bit higher? The market may be priced in a disappointing earnings season, say 3 weeks back, because as the market would always price in an event at least a month ahead. So now when the actual earnings are out, then the market will take stock of whether the actual numbers was even more disappointing than the expectation or higher than expectation, and then the market will move. But practically the market is at an all-time high, and the way to play this market really is to respect the screen, respect the trend, take long positions and have your stop losses, and there's a good chance that you'll make money.
No, I take your point completely. There's too much of liquidity sloshing around, and therefore you have to be long. But just one word on that, since you dwelt at length on PSU banks, the top 3 banks that you mentioned, I take your point, SBI, PNB, you can look for value for those banks. But the rest of the pack, I mean, the other day, the shares that ran up included OBCs, Bank of India, a whole host of banks. I'm extremely wary of the mid-tier PSU banks. I think there is still a lot of poison waiting to come out. So if the market is lunging on to that, okay, there is so much money that having got everything else of value, you're perhaps going to a place where the market has not picked up at all. But disappointments could be severe in that package, in that pack of banks.
Alright, since we're talking about earnings, let's tell you that tomorrow we kickstart the earnings season with DCB and ACC that will be reporting their numbers. But then following that, on the 16th, you have TCS and IndusInd Bank that announce their numbers along with Mindtree. So TCS will kickstart earnings on the 16th. And then you have Big Boy Reliance that announces their numbers on the 17th of April. So lots of nifty companies announcing their numbers this week. Apart from that, you have a new IPO on the block, which is the VRL Logistics IPO that opens up this week as well on the 15th of April. And then you have a lot of macro data that we'll be keenly focusing on. Today is the March CPI, and then you have the WPI data tomorrow.
That would be terribly important, the March CPI, simply because if it is able to stay below trend, Ekta was saying that her poll has thrown up something as wide as 5.08 and 5.6. Obviously, people are not able to factor in exactly how much food prices have been impacted by the unseasonal rains. But if it were to come at below 5.2, I think we have a good thing going.